Hello, guys. So today I'm going to talk about the principles of finance and investing. Well, it's pretty much a broad topic, but I'll try to discuss as much valuable stuff as I can. So let's start. All right. So just a quick introduction. I'm homegrown from UP fight. That's why these seminars are very close to my heart. Because probably 8 years ago, I was in your exact same spot. I was also a clueless freshie, sophomore in UP. And then it all started one day. Well, I was in BA. I graduated from BA, but then I came from speech com. I came from CAL, College of Arts and Letters. So in my past life, I used to be an artist. So BA was a totally new world for me. And I really wanted to fit in. I didn't have friends. Everybody had blockmates already. I didn't have. So I just wanted to fit in. So I just joined this org. It was UPJFA. And then in UP, the app processes are stringent, right? They make you do so much stuff. And then that day, it was a required seminar. Sa pilitan pa. Required seminar. But then because of that required seminar, I really got hooked into the stock market. I was like, so this is super interesting. And then I learned more about it. And then fast forward to 8 years. So that's today. The speaker from that day is actually my boss. So it's funny how I started that way. He's the COL financial chairman, and I was really lucky that the first seminar I attended, he was a speaker. So I started my journey there. I got into learning more. I learned about the market during my free time. I was learning more about the market than my school stuff, honestly. So that's where it started. I got really super addicted into it. And then even the internships, the competitions I joined like 4 or 5 internships, a lot of finance competitions because my world revolved around the finance industry from that moment on. Okay. So right now, you guys from home who are watching this, I hope I inspire you just a little bit so that you can go further in the industry. All right. Okay. This is why I love the UP crowd because memes, my judgments, they're welcome here. So for your first exercise, I want you guys to type in the word sweldo on your Twitter. And then you can get to see what people really think about their sweldo, their paycheck. A lot of them will say it's not enough. A lot of them find it funny. They say it disappears. Like, it goes to you. Okay? And it is funny. Yung feeling mo na may trabaho ka naman pero lagi kang walang pera. There's a lot of those stuff. And then this one, it never gets old. It's been for like 3 years now. But then do you remember this one time when Heart Evangelista did a vlog and then she realized she had like 60 pesos in her in her wallet? Yeah, and then even this one, even those gifs, people are super creative. And they're funny. They're funny. And maybe we're also guilty about this. Telling our friends, oh, I don't have money anymore, I'm broke, I'm out of money. And then your friends are gonna be like, oh, me too. And then you just laugh it off. It's funny, but then sometimes we don't really realize that we're normalizing it. Okay? We're normalizing it and then it continues. The cycle continues. But then it's good that you're here now. Instead of doing other stuff, you're here trying to do something about it. Because this one, being present in itself, it takes so much already. This is a paid event. You shelled out money. You actually paid for it. And then resources and your time, instead of watching a Netflix film, you're actually trying to learn something for your future. Okay? So before anything else, at the end of the day, you're still in the stock market to make money and to be financially free. So it's good that first and for all, we're aware. All right? Because a lot of people, when you're 60, you feel like you want to retire, right? You feel like you want to be in a beach, drinking coconut, just doing whatever you want. But then in reality, a lot of people won't be able to do that because statistics show a lot of us will be broke when we're 60. Okay? So this is just a quick example for that. You guys know this guy? So it's Allen Iverson. For those of you who like basketball, he's very good at what he does, but he actually burned through $154 million. So is that hard to do? Is it hard to burn through that money? It's very hard to do, okay? But he did it. Congrats. And it's not just him. It's everyone. Mike Tyson, the best boxers, the best basketball players, they are able to burn through their money to the point that they have to sell their Olympic medals sometimes. So what does this tell us? What does this tell us? So it means that it does not matter who you are. It does not matter how good you are at singing, dancing, how smart you are. If you do not know how to handle your money, life will be very hard. Okay? Life will be very hard. You guys are smart. I'm sure you were top of your classes in high school. And then in UP, they teach you hard work, they teach you honor and excellence, but we also have to remember that at the end of the day, it's very hard if you do not know how to handle your money. Okay? Even in college, even today, I'm still very idealistic. But I remember this one time, I just graduated that time, and then your brother had a speech. She said, it's okay to chase money. It's okay to go for that high paying job in a multinational instead of an NGO as new UP graduates, all right? Because a lot of people might diss at you because you're like a sellout, right? When they're saying para sa bayan and then you're out there for a corporation, not really doing anything for the country, right? And then she said, it's okay to chase money. It's okay to climb because you cannot help other people if you're struggling yourself. How can you lift other people up when you're not up there? Okay? So I'm guessing this ties everything together because even when I was in UP, it was very hard because I was in JFA and we were branded. I'm sure UPIC might be the same. We were branded as capitalista, but you're not supposed to be doing that. You're supposed to be doing more for the country, and that's okay. That's okay. This just teaches us that it's not mutually exclusive. Because at the end of the day, we're going back to our why. And it just so happens that our why is also connected to what UP teaches us. Okay? So why are we trying to make more money? Why are we trying so hard to get forward with our path to financial freedom? What's our why? And if the person next to you has a different why, that's also okay. If your why, if the reason why you're working so hard, why you're trying to secure your future is because of something simple. For me, before my why was very simple. I wanted to be financially free because gusto ko when I walk inside the restaurant, I can look at the menu without looking at the price because I'm confident I can pay for it. I want that level of financial freedom. And it might be different for all of you. It might be as simple as sending your brother to school, paying for your mother's medical bills. It's very different from person to person. It can be something as idealistic as I want to build a charity. I want to send 500 kids to school. So we have different whys. But the path going there, especially when you're starting out, we all have the same path, the same struggles. Okay? So you guys, in the comforts of your homes, sitting down there, I want you guys to remember your why so you can be more motivated to actually push forward. Okay? Why are we here? Why are we sitting down here? Okay? Let's move on. So, these are the 3 steps in investing. I'm sure a lot of you know, a lot of you are knowledgeable already. You know, technical analysis, risk management, and the best financial statement analysis. So I'm trying to build a middle ground here for the advanced one and the beginners. So number 1 is deciding who you are. Actually, a lot of smart people fall into that trap because they know everything. They know everything. They know all the strategies. They know buy and hold. They know the momentum trading, but they forget to decide who they actually are, and then they end up mixing both, and it can be deadly. Okay, so that's my tip number 1, and that's what we're going to talking about is to help us decide who we actually are. Then of course we learn the rules and then we execute. We execute because the theoretical knowledge that we have will never be valuable if we don't execute it in real life anyway. Got it? Okay. So let's start off with the investor's journey. What is the investor's journey? If you follow the CEO Financial Chairman, Edward Lee, his Facebook page, his presentations and everything, this should be very familiar to you because it's all out there. All the learning materials are out there. It's all free on YouTube. The best speakers around the world, all their materials are free. It's just up to us if we want to see it or not. But if you just have to remember one thing in this talk, I want you to remember this, the investor's journey, so that you get to remember to decide who you are and you don't mix it up. So we have two, right? So we have the long-term and the short-term investing. For long-term investing, it's very straightforward. One is passive investing, the other one is active investing. For passive investing, this is the most basic thing that they always teach us: save, invest, and reinvest. Active investing, just adding up a bit more sophistication when you want to time the market. And then going into short-term investing can be two, which is the trend following and the counter trend trading. One of the questions that the organizers sent over is, how has the pandemic changed your investing strategy? Okay, I think learning counter trend trading is very relevant, especially during crisis, which is what happened last year, right? So we're gonna discuss it anyway, but usually in your books and in the materials they put out, the focus is mainly in trend following. Okay, have you heard of those stock market players who start off as momentum traders? Even crypto, okay, since it's very relevant now. They start off as short-term traders, making money as the prices go up, but then once it goes down, you hear the terms like long-term na ako, right? Papamana ko na to sa anak ko. Maraming ganyan. Maybe at one point in our lives, we were also guilty, okay? Long-term na ako. And it can be very, very dangerous because as you accumulate losses, it gets harder to break even. Okay, so the step number one is deciding who you are. Before you enter a trade, tell yourself, is this a short-term or a long-term trade? Some people even go as far as separating their short-term and long-term portfolio so that they don't mix it up. Tao lang naman tayo, we get confused sometimes eh. Diba? So it's okay. But then, you just have to decide. Write it down, even before your trade, okay? So for the next one, these are strategy models in helping you decide how you should be doing it. So there are three. Number one would be passive investing. Next one is active trading. And then the last one, we have more money. When you're more busy with your career or your business, you do active investing. Okay, so these are just ballpark figures for the three. So when you're starting to build wealth, you do it monthly, or I don't know, every time you get allowance, every time you get a bonus. So you can start as early as 13, or maybe even younger if you're smart. Okay, just low risk appetite. You don't need to do much, don't need to be too smart. You just check the blue chips, the best companies with the good financials, the stable ones, and then you just invest in it regularly. The next step is active trading, which I think a lot of you would be doing, especially when you're like 18 years old. And now when I was in college, I was super into this because you have risk appetite. You want risky things, you want fast moving things, and that's okay. And that's very normal. So you do momentum trading here with the informed speculation companies, okay? And the last one, when you have a lot of money, when you're like 40 plus and you want to spending time more for your family, for your business, you don't have much time to do active trading anymore. You stick to good fundamentals and you do position trading, okay? So these are three buckets. And then sometimes you don't have to decide on one. You can do both. When you're young, you can have a passive investing portfolio, just EIP, something automated, but you can also do active trading. That's okay, okay? So going back to the models, let's first discuss passive investing. Passive investing, like I said, it's very straightforward. Save, invest, reinvest. All your financial literacy books will be telling you about this. So number one is, saving, cutting down your expenses so that you have something to invest. This is what they call the latte factor. How much is a cup of coffee? Starbucks is around 200, assuming you don't have so much add-ons and you get the biggest one. Okay, so let's just make a ballpark 200 pesos. So if you do that, if you save 200 pesos every day for 10 years, 20 years, 30 or whatever, 50 years, so that's what you will accumulate, okay? So if you do it for 50 years, that's like 100 million, okay? That's a lot of money, which only started from the 200 pesos every day. So that's a lot. So it's basically telling you that you don't need big money. You just have to do it consistently. You just have to keep the discipline, and then you'll get your path to financial freedom. Okay? Because in the long run, stocks outperform other asset classes. The stock market has been really bad for the past few years. It's been sideways or even down, especially with the pandemic. But that's life. That's a stock market. This is a chart from 1926, and it happens. The stock market outperforms. It gives you more returns because it gives you more risk. That's life, right? So for investments out there, when they tell you it's guaranteed and then it's like 100% double your money, it's too good to be true. That's the general rule with investments: higher risk, higher return. And the stock market is the same. That's why if you're here for the long term, you have to understand this, that the stock market can really go down because ganun talaga eh. That's how the stock market is. So don't be surprised if the index, the Philippine Stock Exchange Index goes down like 20%. You don't have to panic because it really happens historically. But you just have to keep at it if you're a long-term investor, that is. Okay? So for the Philippine Stock Exchange, PSEI, a lot of things really happen, right? Coup d'etat, Asian financial crisis, the 09, or the 08 subprime mortgage crisis, and even the COVID-19 pandemic. A lot of these events happen and it will really drive the stock market down. And this is something expected. A crisis, of course, will bring the market down. That's why when the crisis is there, when the next crisis comes in, you have to be more prepared, not to panic, but to actually take advantage of it. If it's something automated like the EIP, they call it the Easy Investment Program. So EIP is a program by COL wherein you can automate it. What I do, because even for your banks, for example, in BDO or BPI, you can automate the deposit into your COL accounts. And then you can also automate this in your COL account. So you don't really have to do anything about it. This is the best way because you don't have to bargain with yourself at the end of the month. Oh, I really want to buy this. Mag-add to cart na lang ako instead of putting it into my COL account. Because you can also do that. You can also forget. That's why if it's automated, wala ka nang isipin. Okay? So for passive investing, you just do this. The reason why I'm still discussing this, even when I know you already know this, is because of this. Because you guys are young. We're young, right? So time is on our side. When you're young, you have to take advantage of passive investing and miracle of compounding. They call it the miracle of compounding. It's so many buzzwords, but it's actually real. Because when you're young, it just compounds and it compounds and it does a lot for your portfolio. Okay, so that's the number one. So that was passive investing. So you guys have to start as early as possible. Okay, so the next one, sige, active trading, we'll discuss it the last because it's the hardest one. So let's go first to active investing. Active investing, even when you're trading, you can also do it anyway, with just different tools. Okay, so let's start with this chart. This is always a question. What drives the stock price? A lot of people will be asking, why did the stock price go up? Why did it go down? Bakit dumoble? Okay, so in theory, as our finance books would tell us, fair price will track the earnings trend. Why is that? Why is that? Because a company, it gets more valuable as it earns more money. Okay? So SM, if they earn, for example, 100 million, well, they don't just, yeah, 100 million, and then this is their price. And then the next year, if they earn 500 million, that's times 5. In theory, their fair price should be times 5 also. Okay? That's the general concept of the stock market. But then that's not what happens in reality, because in reality, there's a lot of things at play: your perception, expectations, and emotions. It's not parallel. Okay. You'll see a lot of mispricings. You'll see good companies with good revenues, good net incomes, but then they're trading at very low prices. And then you see companies without anything inside, just stories, but the prices would be up there. And it happens. Okay. So this is the general concept of active investing, because prices can drop significantly at any time and you can take advantage of it. Okay, so this is the PSEI. Same companies inside it, generally same fundamentals. Well, this happened in COVID, so it can really go down. This one was 52%. It was really wild. Okay, and it can scare you when you're out there. But then if you're prepared, you can also take advantage of it. So that's the concept of active investing. And with active investing, this is what we have to remember. Because numbers, it's not just numbers, it's story plus numbers, it's your narrative. Because some companies, they won't even have anything, they won't have any numbers, but then the story is good. They're injecting the super high tech, super high growth companies, and it can happen. And then if you just stick to the numbers, you'll be left wondering, bakit umaakyat? No, my valuation says it's this one. No, my valuation says it's 100 pesos now. Why is it 1,000? We just have to build the middle ground. There's a gray area. The stock market is always a gray area. It's a mix of both. Okay, so it's dangerous if you just stick to one. You just have to realize that it's really in the middle. Okay, so this is an example of that. In connection to that, you have to remember the corporate life cycle. What's a corporate life cycle? It's basically assigning labels to companies. Buti pa sila may label. And so basically assigning if a company is a startup, young growth, or something big already. And then that's where you set your expectations with these companies. Okay? Oh, oops. There. So for example, this one, a big company like PLDT or Jollibee. Well, actually this PLDT can be switched to this because of Paymaya, because of the other ventures they have. Okay. So that's the concept of it. When companies grow, as companies grow bigger, it's harder to double them already, right? For example, a small one like Double Dragon, you can double it. You can double it. But if you're as big as PLDT or Jollibee, it gets harder to double as you go bigger, okay? So they have to bootstrap, they have to acquire companies, they have to do other ventures in order to keep their growth. Otherwise, they will decline. And then this expectation gives us the strategy for active investing. So if it's young growth, high growth, or startup, this one you can do your momentum trading. You can do your trend trading, or actually any. But then if it's a mature company already, you try to go for the buy low, sell high strategies, all right? So it's harder to do a momentum trade, to do a breakout trade for a company like PLDT because it's already up there and it's a dividend stock. So it's harder to expect it to double in the next few years as compared to a smaller one, okay? So different type of company, different stock DNA, different strategy, okay? Let's remember that. So that's active investing for you. And then, okay, so we covered passive investing and active investing. So we go to the most interesting part, which is the active trading. So for short-term trading, again, there's two, trend and counter trend trading. This goes a long way, actually. There's a lot of materials out there. There's a lot of courses out there. But I'm here, well, not just a warning, not really a warning, to remind you of other stuff that we might be forgetting, even though we know our technicals by heart already. Okay, number one, history repeats itself. Okay, so this is an example of the bull bear cycle. If you'll notice, it's the same. It's the same with, this is an example, RCA. This is 1929, the mania. And then this is a US stock, QuantumScape. This Bill Gates had a stake here. And then even GameStop, if you're familiar, this caused a fuss last year. So everything can go like a pump and dump. If you see crypto, maybe it kind of look like the same. I'm not predicting anything, but you might see something parallel, okay? So history repeats itself. That's also the main reason why technical analysis works, why patterns work. Because at the end of the day, it's not about numbers. The stock market is not just about numbers. It's about those people behind the computer screen clicking that button, because those people, they're humans. They have emotions. Kinakabahan din yan. They also get greedy when the stocks go up. They also get scared when it goes down. So it's the same reaction. Even as far as 1929, even today, human beings will be the same because we have the same emotions, okay? History repeats itself. That's why when you're coming in, for example, you came into crypto at the top, don't feel bad because it happened so many times already, okay? And then in the next one, that will also serve as a guidance for you because it happens. And then you have to be aware that you can feel greedy. You can feel your FOMO, fear of missing out. And that's okay. You just have to be more prepared for the next one. So let's move on to this one. Another reminder. So this is an evolution of a profitable trader. A lot of people ask me, can I become a full-time trader? Can I quit my job? Okay. So this is telling you that in the bull market, everyone's a genius. Everyone can make a lot of money. When you compute, you're going to be like, I make so much more money here than I make in my day job. Right? And it's exciting. Don't get me wrong, especially in college, that thing excited me so much. I was making money. Why should I do my homework when the teacher's not paying me to do my homework? In the market, when I study the fundamentals, when I study the financial statements, and it does well, I make money. So why should I listen in class, right? No, don't do that. Don't do it. You have to study, okay? So this just tells you that it's not an easy game. If you're lucky, the first round might be really good for you, but then it's harder to sustain if it's just luck. And if you want to make it a job, if you want to make it a business, it needs to be sustainable. So we work closely with CTS Global. CTS Global, it's a floor of proprietary traders. So that's what they do every day. It's basically their job, professional traders. And working with them and even doing trading by myself, I realized that it's really a hard process. So you go through stages, stage 1, stage 2, and stage 3 before you become a profitable trader, okay? So you go through a cycle. I'm putting this out there. I hope a lot of you are already on stage 3, but the beginners, the people who are just starting out, I'm just putting it out there to tell you that it's not that easy, but it's very possible, okay? It just needs consistency and discipline. And then the third reminder, trading is understanding what you can control. You'll notice when, okay, for example, crypto, a lot of active traders are out there, but then when the prices start going down, everyone's blaming Elon Musk. When it was going up, everyone was cheering for Elon Musk. Because in trading, sometimes you get to realize that you blame everyone but yourself. But then, when you want to make it a business, you have to understand that there's only so much you can control. And in the stock market, there's so many moving parts. So you have to understand what you can control and what you cannot control, okay? That's the only way it can be a business. So for the last reminder, when you're doing active trading, again, this is in connection with the general theme of this part, which is deciding who you are. You need to really separate investing from trading. It can get dangerous if you mix both and you get confused, okay? So it also depends on who you are. If you like technical analysis, if you like quick price movements, then you do trading. But if you like sticking to the fundamentals, you do investing, okay? There's a big difference. I'm also guilty. Also happened to me a lot of times. I will fall in love with the stock. No, the stock price is super cheap. It's super cheap. It's gonna grow 50, 100% next year. Why is the market not understanding that? I'm gonna ask that. We can even go as far as telling people that the market is stupid because they do not understand how good the company is. But it doesn't matter. The market doesn't care if you're smart or if you're stupid. Diba? Are we supposed to say that we're smarter than the market? So these are one of the pitfalls when you mix up investing and trading. And you guys, I'm sure you guys are smart. Smarter people are actually harder to deal with because they can justify everything and they're smart. They did their due diligence, they did their homework, and they can justify it because maybe it's true. The company is really wonderful. But then if the market is not pricing anything, wala tayong magagawa. Okay? So in UP, a lot of us are very matigas ulo. So this is a pre-warning so that we don't hold on to a stock that's losing just because we feel like it has very good prospects. Okay, so needs to be both. There should be a line separating the two, okay, so that we don't hold on to too much losses. So yeah, that's it. That's on deciding who we are. Well, we actually discussed some of the rules, but I'll run you through some of the rules before we go through the last one, okay? So how do we learn the rules? Which rules do we actually follow? So this is a general framework that we use. This is from Calum Trading Institute. Yeah, it's from the previous speaker. So Edmund, he was also one of my mentors, even up until today. Even I remember the first talk I had, I was like 18, and then I was really so scared I even called him up. So these people building mentors throughout the years, it really builds relationships and you learn a lot from them. Even when I was starting out, this was my framework. This was what I followed, okay? So thanks to Caleb for that. So yeah, FTSR framework. So first is fundamentals and technicals. So if you'll notice, it's like balancing between the two, just like the previous one, the investing versus trading. So these are two sides of it. This is the Miss Universe question for traders. Do you like fundamentals or technicals more? So you can also answer that it's not mutually exclusive. So fundamentals would be the study of your business value, your 4Ps. So your product, potential, the people behind it, predictability. For example, your Jollibee, is a product good versus Maxis? How many branches are they opening? So basically everything inside the business, okay? And then the technicals, this would be your stochastics, your MACD, your moving averages, everything about the price, nothing about the company fundamentals. And then the next one would be sentiment. Sentiment, this is very relevant to what happened last year, the COVID pandemic, okay? Because even the best gems, even the best companies were sold off because the market sentiment is bad. And that's all that it is, okay? And then the last one, risk. We can never forget this. That's why in the FTSR framework, risk is your base. Because no matter how good we are with fundamentals and technicals and even sentiment, if we do not have proper risk management, mauubos din tayo. Okay? Okay. So let's move on. So this was the question. The question, how has your strategy changed with the COVID pandemic? I'm going to show you some of the rules with counter trend trading. A lot of people don't teach this because it can get very dangerous, but this is just to run you through how people really do it with rules. Any strategy is fine as long as you stick to your rules, okay? So, for example, capitulation. This is called the mean reversion trade. How do we look for capitulation trades? So we want them to have discounted valuations and insider buying because you want the insiders putting their money where their mouth is. That's their money. It's their own money. They're really buying their shares back. And then this is, oh, I forgot to put it out there, but mean reversion trades, capitulation trades, you only do it when the whole market is tanking, not when it's only your stock that's tanking. For example, the market's going to new highs and then there's this stock down there. There must be a reason why it's down there and the market is up, right? So you only do capitulation trades when there's a big disparity and the whole market sell off. So it needs to be a market driven sell off, not a stock driven sell off. There should be no problem within the company. It's just that the market sentiment was bad. That's why it was sold off, okay? So, okay. These materials are from 2019. Just goes to show that even before the pandemic, this playbook has been there for a long time. Every crisis, there was a playbook. So if you have this playbook, by the next crisis, you'll be very prepared, okay? So your entry points would be the parabola or your EMA break, and then your cut is to the bottom. I'm going through this not because I want to teach you capitulation itself, but I'm just really showing you how detailed the rules are for these professional traders and how they really do it. So it's not just pikit mata, bahala na. It's not that. There are rules. There are very hard rules in the game if you want to do this professionally, if you want to treat it as a business. Okay? The next one is reversal trading. So after the first capitulation, it goes into consolidation. So there are three types. Reversal trading can be V square root, your W, or your LPU. There are so many YouTube videos out there to discuss more about this, but this is just to show you that it's real. It really happens. This is the PSEI, and this also happened last year. This material is from last year, so this is 2017. If you look at the 2020 chart, it's the same. So if you follow the same playbook, you can look at the chart and just check how much money you would have made, right? So it's all about patterns. The market is all about patterns. And don't worry if you missed out the last one, because it's going to happen anyway. Okay? So that was the playbook for last year for the pandemic, but that's technical analysis side. Okay? That was technical analysis. You can also incorporate fundamentals, especially with what happened last year. Last year was very significant. I remember during our presentations of 2019, 2018, we would put out capitulation plays. And the types of crises that we'll have would be financial crisis. Sometimes there was even a political crisis and even natural disasters. But we actually never thought of a pandemic. We weren't very prepared for it. But it has the same DNA. So last year, when you think clearly, what actually happened last year? What were we doing? We were at home. We cannot go out. The malls were closed. You were lining up for groceries, your Pure Gold, your SNR. And then we were just at home using our phones, using our Wi-Fi. So with that, you can decide which companies were essentials, your Pure Gold, your CNPF, because you still eat and you still use your Wi-Fi, your phone, and everything. And there were companies also that were not as essential, the property companies. There were less people buying condos because everyone was working from home. And not a lot of people can afford it anymore. And even the restaurants were hit. The malls were hit, okay? So last year, you can segregate them by essentials, non-essentials, and the defensives. So if you'll notice with the stock price last year, the essentials outperformed, okay? So that's a way that you can do in the next opportunity that comes. So if you think there's a crisis, if you think there's a very special event, a phenomenon, you think who will benefit and who will not benefit. And that's how you incorporate your fundamental analysis into play. Got it? So there, that was the question, the answer to the question. Okay. So we laid out stuff to let you decide who you are and to learn your rules and to show you that there are rules, right? The last one would be executing. This is very important because in school, even in finance classes, I remember in school, it was all paper trading, but then it's very different when you do simulation versus you do in real life. It hurts so much when you do it in real life. When it's real money, when it's real losses you're sitting on, it gets a lot harder than when it's paper trading. You have to execute, okay? And in connection with that, you have to apply what you learn in real life. That's the beauty about the stock market, especially for us, we're more active in the global markets. So our fundamental analysis, it's not just about being the best in computing your PE ratio, the best in computing your growth or predicting. We look at businesses in the way that we also check their narratives. When you check companies, you get new ideas. How do these companies in the US innovate? How do they provide new products? How do the best companies manage their business? Okay? And it's also something that you can apply in real life, right? When you start your own business, you have to remember, AMD did this to beat their competitor. Oh, Microsoft did this, that's why this happened. oh, Google did this, Facebook did this, okay? So that's the beauty about the stock market. You learn skills that are actually applicable to other sides of your life. The stock market is not just there for you to make money. You learn a lot from it, okay? And you also learn about yourself because the market is a very emotional game. Well, it shouldn't be, right? But it lets you understand who you actually are. I remember this person who told me that you learn more about yourself in your first year of trading than other people their whole lives. Because the stock market is like one big mirror out there. It's telling you, oh, you're not good at this, or you're really bad. All your life you thought you were good, but you're not. So it humbles you. It lets you realize your biases, the stuff that you tend to do when you're not supposed to do it. There. So that's the stock market for you. Okay. And also, since the topic is principles of finance and investing, I'm gonna be talking about real life finance principles also. So that was about the stock market, and then we'll move on to real life tips, especially for you guys or college students. Okay. So here, let's just go through this quickly. So college finance rules. Baka sawa na kayo because there's so many financial literacy gurus out there who will tell you, spend, don't spend, you save, and then yeah, they say you're supposed to spend only 70% or you're 100% minus your age. They have an equation path for that. But then, if you'll notice here, there are 4 quadrants. So it's spending, earning, investing, and saving because it's these 4 that dictate your financial life, right? I can't say much about spending. It's just basically spending on what matters, okay? And also saving because I was also not good at saving in college, but then I focused on the other side. I focused on investing and earning itself. That's what my boss sometimes tells me. Don't penny pinch, but you have to maximize your earning potential, okay? So focus on the bigger things. Focus on earning more than saving 1 or 2 pesos. Okay, well, it's also important, but then especially you're young, you guys are very talented, you guys work hard, you guys are very smart. I'm sure your earning capacity is very, very big. Okay. So let's start with number 1, which is spending. Spend on what matters. Before I had a rule, well, it was for physical shopping. It's harder now because it's so easy to add the cart, right? So before, I had to wait for a week before I actually spend something, before I actually buy something. Because if I forget about it, it means I really don't want it. I don't really want it enough, right? So that's it. Spending on what matters. Because sometimes it's very impulsive, right? And ganun talaga eh. The next one is earning. In college, I had side hustles. I do sometimes freelance financial analysis for other people. So I think it's some companies or working people who want to outsource some stuff and they really like doing Excel. I like doing analysis. So I sometimes do it like 5,000 per project. So that was the thing for me. I was really poor in college. So that was already super big for me. Okay. You're lucky today because with technology, there are websites like Fiverr and freelancing websites. If you're good with designing logos, websites, feel free to do your side hustles. And online shops are rampant nowadays. You can do all those things, okay? So one income stream is really not enough. That's what I want to tell you. So the stock market is also a way for you to have your side hustle, but then the stock market is very cyclical. It's a good way to have additional inflow of money, but then it's not stable, okay? So maximize your talents because you guys are smart. The next one for college students. So this is a tip. In college, they call me raquetera. Especially during my last year, I was always mascots with my classes because I was out with competitions. Because competitions, they pay a lot. A lot of these competitions, the general ones pay you like 100,000 for the championship per team. And there was this one competition I had, it was in Malaysia. So the cash prize was 40,000 US dollars. So that was really big for me when I was a student. I was really poor. So these competitions pay a lot. These companies have big budgets for their HR. So make the most out of it. The next one, internships. It varies from internship to internship. Some you do for learning, but some really pay well also. I think I had some internship who pay like twice the minimum wage, and it's already a good deal if you're a student, okay? And then the last one is preparing for employment. I know it's very hard with the pandemic, and there was even an issue with that the Atenista girl who didn't accept a job offer, the 60K job offer, and it was very controversial. But I'm just here to tell you that you have to shoot for what you deserve, okay? I mean, I'm not telling you to demand from your employer, but the number one tip for this one is make sure you have choices. Don't be in a position wherein you're forced to take a pay that you don't like in a job that you don't like just because you don't have any other choices. I know we're supposed to be thankful, we're supposed to be grateful, but we also have to know what we deserve, right? So even before graduating, make sure you set up the foundation so you can have choices. Just for context, before graduating, I shot probably at least 20 employment applications. So you have at least 5 in line to choose from even before you graduate. Okay? So that's what you have to remember, because you're up against other graduates. The market is very saturated. There's so many people fighting for the same jobs. So you have to be prepared. You have to prepare as much as you can. It's not enough that you work hard inside the classroom. You have to work hard for things outside also. Okay? And these competitions, these internships, even when they don't pay money, they pave the way for you to get connections, for you to know these people and to get job offers, right? So that's how you prepare for that. That's the quadrant about earning when you're in college. This is very tricky because yeah, the pandemic tires us so much. I know the load right now is very hard, and it's hard to do side hustles on top of your academic load. But then these are options. I mean, we don't want to promote toxic productivity here, just if you want to do it, okay? Next one would be investing. So you have to invest in the right things. This is, di naman masyadong user, but you have to spend time with the right people eh. You know what they say, that you're the average of the 5 people you spend the most time with, right? So we have to have the right friends, connections, competitions. The college is a very good opportunity for that, because even today, even when I'm working, even when we need to do a project with other companies to have partnerships, my connections from my college orgs were really helpful, right? People I knew from before. Because when you start working, the pool gets smaller. When you're in college, you can get to know everyone. Your classmates in your GE, in your N10, in your Com3, you get to know them better. You get to know a diverse set of people. Compared to when you're out there, when you're specialized, you just meet a small group of people, okay? So they invest in the right things, right? Friends, connections, competitions. Oh, I forgot to write it here. Invest in yourself, the right skills, okay? Don't penny pinch, buy that book, buy that, well, not all courses, right? Some are really expensive and they're rip-offs, but spend on learning materials, okay? Do not shortchange yourself. And then for the last one, on saving. This is very hard because my mom tells me I don't know how to save. Just kidding. Okay, so promos, I really enjoy finding promos. So I usually like all the promos, shop back, even in Food Panda and Grab. I know all the promos, even the Shopee coins, lahat pinapatulan ko yan kasi I really enjoy it. I really enjoy finding those, okay? And on top of that, as a student, you have to use the opportunities available. Student discounts, your free softwares, free Canva, free Zoom, free Microsoft, free everything. Stipends, the scholarships. So for me, I like traveling. I like hotels, staycations. So so there's a lot of programs. So there was this program from Harvard wherein I flew to New York for free. I got to watch my favorite play. I got to study in Taiwan with stipend. Everything was for free, because there's really a lot of opportunities for students. We just have to open our eyes and to actually check them out. There's a lot of these programs out there, okay? So you save money by taking advantage of them, not taking advantage, just using them, right? Okay. So you don't have to spend your own money. You save using that. So that's the 4 quadrants. Okay. And then I think I'm not sure if some of the people here are working already, but this might be helpful, especially for the graduating ones. This is like expense pyramid. This is like my general finance principle, okay? So pinakailalim, this is what you should never have. This is unacceptable for you. Well, I can't say for all because some people would have very different circumstances, right? But basta, try not to touch this, okay? So some people incur debt because their incomes are not enough, okay?